Good morning, guys. My name is Martin Sands. I'm a local licensed CPA here in the Atlanta, Georgia area. And I also want to quickly discuss the W-2, basics of the W-2 and taxes and how that works. Sometimes we as tax professionals, we sometimes take for granted that everyone understands how the basic concepts of the W-2 and the tax return works. Everyone who's earning a paycheck and paying taxes. And that's not really the case, right? So box one shows their income earned for the entire year. So make-up scenario, let's just say for an entire year of 2024, you earned $75,900. That's what box one shows. You don't have anything else as far as 401ks or anything else. It's just flat, straight income earned. Box two shows your taxes withheld over time for the entire year, right? And this amount is withheld in small amounts, small dosages throughout the entire year. So if you get paid bi-weekly, simply put, $7,547 divided by 26 weeks, that'll give you a rough estimate of how much taxes is being withheld from your paycheck for federal taxes, federal income taxes. No other taxes. We're not talking about nothing else, no insurance, nothing else. Just what's withheld to cover federal income taxes throughout the year. All right, you'll arrive at an amount, $7,547 divided by 26. Arrived at that amount, that's what's withheld bi-weekly from your paycheck, roughly. So in 2025, January, February, March, somewhere there in 2025, you'll file your tax return. All right, you'll have $75,900. You'll have your deductions applied to it, standard deduction or itemized deductions, whichever one benefits you better. All right, so you'll subtract that amount from your wages and you'll arrive at taxable income. All right, and that taxable income will be multiplied by your applicable tax rate, right, based on the tax bracket, income bracket that you're in. All right, and let's just say, for a quick example, that calculated tax works out to be $6,000 after multiplying or applying the applicable tax rate. All right, $6,000. Well, you have $7,547 that you have to apply towards that amount. So $7,547 applied to the $6,000 that's due. You have a refund. That's where the refund comes from. You have a refund of $1,547. It's as simple as that. Okay? If you claim 9 as if you have 9 dependents, or some people were saying, you heard it before, claim 9 so that they take 0 taxes out. Well, they'll take 0 federal income taxes out, but guess what? You're going to be on the hook for that entire $6,000 to pay that entire, come up with that $6,000 all at one time, and you have no refund, and you have to cut a big old fat old check. Okay, so you have taxes owed. It's as simple as that. All right, so the refund comes from taxes withheld, box 2. There are some cases where you have refundable credits, right? And credits that will give you a refund regardless of whether you have taxes withheld or not. But it's very complicated. And we're not discussing that. We're discussing the very bare minimum basics of how the W-2 and taxes work. All right. There's no tax-free loan. Let me just touch on that real quick. There's no tax-free loan that you're giving the government if you have sufficient amount of taxes withheld at the end of the year in box 2. Guys, the taxes withheld in box 2 is withheld in small dosages, in small amounts throughout the entire year. It's not withheld all at one time. For instance, it's not withheld all at one time on January 1st of 2024 to where you don't end up filing taxes until January, February, March of the following year in 2025. That year, the government sits on your money for an entire year all at one time, sitting on that lump sum money for an entire year. And that's an interest-free loan. And even in that case, taxes are going to be due on your box one income regardless. So the portion of the interest-free loan that you quote-unquote interest-free loan is not the entire $7,547 if it was withheld on January 1st, right? Going back to the example, if taxes due were going to be $6,000 regardless, then yeah, maybe they held on to $1,547, your refund, the amount that's given back to you. Maybe they held on to that portion only as an interest-free loan. It's nonsense though, because your withholdings don't work that way. They're not due, and you don't deposit them all at one time on January 1st. It's nonsense that's been going around for the longest. Your withholdings are withheld in small dosage, in small amounts, evenly throughout the entire year. So, mid-year, it's only half that amount that you have provided government with so far. And we already know that half that amount is not going to be enough to cover your taxes. Okay? And then you go farther into 3/4 of the year. 3/4 of that amount, $7,547, is being withheld from your paychecks up to that point in time in the year. All right? And 3/4 of that amount may or may not be just about exactly enough to cover what you will owe the government anyways. Right? So now we come down to the last quarter of the year where you're giving them a little bit overs. That's going to come back to you as a refund, right? In this case, it was $1,547. So maybe that $1,547, that didn't kick in as deposits to the federal government until the last 2-3 months of the year. So they had an interest-free loan from you for 2-3 months. Please be safe. Be safe than sorry. Okay, it's nonsense that's been going around for the longest. You're better off being safe than sorry, to where you're owing the government or you're racking up interest and penalties for an amount that you owe and you cannot pay all at one time at the end of the year. All right, if this helped you understand this a little bit better, smash the subscribe button. Okay, and I'll chat with you guys later. All right, have a good one.